Hi, this is Jack from Alpha Charts with the State of the Market video. Today is November 21st, 2020. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you enjoyed these videos, please like and subscribe. I have a YouTube channel, and I am on Twitter at AlphaCharts365. All right, so we're going to start with the S&P 500 like we always do, and it is within this range right here. Tried to break out of it this week, and so far well, got rejected, but it's staying up nice and high. Um, all the moving averages are bullishly aligned, so there's really nothing negative about the S&P. It looks pretty healthy to me. It's just trying to soak up some supply in this area right here. Um, and the idea would be that hopefully it would continue to move higher. I'm also open to the fact that we are still within this fairly broad range right here, and we could dip all the way back down to this lower bar here. Um, Potentially even all the way down here to 3,200-ish, and that's always a possibility. But as of right now, this looks pretty bullish. It's staying up high. In order to get down here, it'd have to break a lot of these moving averages, which are all rising. So it looks pretty good. Qs. Qs not as bullish as the S&P. So technology lagging a little bit. Um, Still bullishly aligned. It's not that they're doing terrible, but still within the box and the chop fest going on here. Again, I'm open to the possibility of this rolling over, but as for now, it's staying up pretty good. Small caps, which have been perennial laggards for like forever. Yeah, they're looking pretty good. They broke out to all-time highs, and they're holding up one of the best. So the small caps are doing absolutely amazing right now. So that's really good to see. Um, yeah, small caps looking great. Again, that's an equal weight index. So let's go back and look at the equal weights. S&P equal weight, um, holding up very well. There's your breakout, being above the breakout, and QQQ equal weight. Nasdaq equal weight actually looks a lot better than the Qs. And we've talked about this in the last. There's the Qs, hasn't broke out yet. Equal weight Qs has broken out. So to me, it just means that the FANG stocks are, those mega cap stocks, Amazon, Apple, Google, Facebook, aren't performing as well as the broader market as a whole. But I think that's actually a bullish thing because it just means that there's more participation and an excellent breadth in the market. So when those others do start to move, those mega caps, and they will, if you look at Apple, it's just consolidating this range. Eventually, once it breaks out, things are going to really start to move. Same thing with Amazon. It's just within a range, not as healthy looking as Apple. But again, once it's done with whatever move it has going on here, you know, I expect it to move. I would expect it to move higher, but we'll see. All right, let's go on to Xlf Financials. Moved higher, holding up really, really well here. I think that is part of the IWM story. That and XLE has done actually pretty good, moved up on their big components. So I think that but as a market indicator, which is how I'm using this, it's healthy for the market to have financials moving higher and participating. Next up is going to be SMH, the other index ETF, not index ETF, but sector ETF that I really like to watch is semis for obvious reasons. They're in basically everything, and they are right near all-time highs. I think that's it's bullish always. All the moving averages bullishly aligned, so it looks pretty good there. Let's look at lumber. Lumber broke out. Again, this was a huge area. Broke out and is still holding up at multi-year highs. So that's looking pretty good. Definitely 52-week highs. Yeah, so it's an uptrend. I think that's great. What else we got here? Let's look at the let's see. Let's do bonds. Okay, let's look at the credit spreads and let's just get rid of volume. Yeah, so this was the area that was really you know holding up the decline or the tightening of credit spreads, and we've busted through that, and now we're staying below that. You can see the trend is lower, so I think tightening of credit spreads continues to be a bullish sign for the markets. Looking at um, let's see what else we got here. VIX sub 25, 24 and a half, 25. I think that's bullish. Love to see it eventually take out this 21.3 level. I think it will. I think that the trend is definitely, lower at this point. If we see a big spike that, getting above this 24 and a half, 25 area, I think that would change my mind on things. But as of right now, I think the VIX is something I said it's a bullish market. Put call ratio, equity only. Um, so these are the areas I identified as, extremes, and so where's the signal? So the signal, in my opinion, is really here, right? So when everyone gets bearish, that's, I think, a great time to consider going bullish, you know. Um, but when everyone is bullish, we tend to say, well, it's in a bullish range because things can stay bullish for actually a very long time. And, and it's no big deal. And that's what we have right here. We just have a bullish range. Every so often it shakes out and gets people on edge, and then all the top callers come in, and the little fear comes in the market, and then it goes right back to a bullish range. So as of right now, I think that we just continue to be in a bullish range. Are we getting maybe a little bit overheated? Yeah. So, when we talk about just look at SPX, maybe this does come in and wiggles in here a little bit, makes a higher low, and breaks back out for real. It wouldn't shock me for it to touch, that 3,500 level. That would make a lot of sense. Again, so you have a low, high, higher low, higher high. So you see this uptrend may have already started in the SPX. And again, this line chart is a great way to see it easier. So yeah, so 3420, 3,500, somewhere in there. If we come back, the put call ratio is saying that expect maybe a wiggle waggle in there. So what does that mean? That means that you have to own the best stocks, because the best stocks are going to pull back the least, right? When everything else is starting to sell, those will be held and potentially even bought. So that's something just to think about, relative strength. But again, so put call ratio may be a little overheated, but I think within the context of an uptrend, and we should be moving, the pullback should be hopefully contained. What else we got here? Let's look at some value line geometric index. Value line geometrics index over the 500 level. That just shows you that the breadth continues to be strong. We saw that in the equal weight indexes. We're seeing the value line geometric index. They're all confirming each other. So again, any pullbacks right now, I think, are viable pullbacks. Again, that could change tomorrow. If this goes straight down, that's a different story, right? If we get a vertical violation, if you look in let's look at the cues for this. So look at the cues. There's 3 cues in QQQ. Come on. There we go. All right. Yeah. So like back here, that's what we would call a vertical violation right there. It went through, it sliced through moving averages, right? So that would be a time to get cautious. This one I don't consider a vertical violation because it was extended from the moving averages. Also, that's a 5% move, and that's a 2% move. Big difference in the moves. If we see this type of 5% huge move, that would be definitely something to take notice of. All right, I'm going to round this out really quick with gold. We've been watching gold for a while. Just don't think it's ready yet for me. It's building out this right side, and it may build out. It could roll over. What do I know? But I think this is a neat place if you're looking to get long gold for whatever your time frame and risk tolerance is. I think that this 174 level is a place where you can manage risk against. I just don't know how long it's going to take to build out this right side. So that's why, time is an opportunity cost. So that's why I'm not, considering gold right now. Just building out this right side was 406 days, right? So that was over a year. We've been building out this side for only 100 days or so. So, it could take another, 6 months, 8 months, 9 months to build out this right side, or this could actually, fall back down. But so it's just one I'm watching. There's gold. Again, the gold versus SPX. Again, another one that I think looks really interesting. If it builds out the right side, obviously gold would have to go higher. SPX would have to be flat or just not going higher as much or down for this to happen. But it is potential. And I think if it does happen, be very, very bullish for gold. I'm just not there yet. So it's just something we're watching. So that's that. And so just rounding out my thoughts on this, I think that we're still in a range bound market for now. I would expect another shakeout, probably a higher low to be put in. Watch this 65-day EMA. That'd be a pretty neat place on the Qs to for potential support to pop in there right around that 280 level. So we pull back to 280. It's really not that big of a deal. It was about 3% or so from where we're at. That would make sense. That would shake out the excessive bullishness that may be creeping into the market. And I think that really all the under the hood type of signals that I look at are all saying that we're in a bullish market. So I think this is a time to own equities. If price gets below 261, 260, I will definitely change my story, right? If we get below 260. But as for now, I think a higher low is the more likely scenario, and I think that's where we're headed. All right, so that's what I got for you today. Hope you all got something from this. Enjoy. Leave me some comments. I always appreciate it. You guys have a good week. Take care, and happy Thanksgiving to everybody.